Good morning, students. Welcome you all on the live revisionary classes organized by Board of Studies of ICAI. Students, today we are going to revise Ind AS 38 Intangible Asset Standard. Friends, we covered this standard in two classes. We spent 6 hours in understanding this standard. We did a lot of questions. We did a lot of questions from Board of Studies material also, right? That ICAI study material. So now in the next 3 hours, we are going to revise this standard. Okay. So friends, as far as agenda is concerned, the agenda of the standard is the quickly we'll discuss objective and scope, quickly we'll cover. Then we'll spend some time on the definition of intangible asset. We'll talk about recognition criteria, right? We'll talk about initial recognition and measurement criteria. We'll spend good time here, right? Set what is the initial recognition criteria and the measurement part. So we'll spend good time in the measurement of the intangible asset as per the mode of intangible asset. Then we will discuss that how the intangible assets are getting acquired, because the measurement of intangible assets depends upon the way the intangible assets are acquired. For example, you went to the market and you bought a software. When you bought a software and you paid for a consideration, okay? So in that case, whatever you have paid as a consideration, that will become the cost of the intangible asset. आप लोगों ने कई बार वो कंप्यूटेक्स और कोई टैक्स रिटर्न फाइलिंग सॉफ्टवेयर खरीदा होगा ना. यू गाइस हैव परचेज्ड टैली सॉफ्टवेयर for the purpose of maintenance of books of accounting. So whatever amount you are paying to the tally company, that will become your cost of the asset, right? But at the same time, when a company is acquiring an intangible asset through the business acquisitions, a company has acquired another company, and by acquisition, some intangible assets are acquired, some intangible assets have arisen, okay? Some intangible assets have been recognized. So those intangible asset has to be measured at fair value. Those intangible asset has to be measured at fair value, okay? So this is their objective and scope, intangible asset definition, recognition criteria, initial recognition measurement, mode of intangible asset. Then we'll spend time on subsequent recognition, which is cost model, revaluation model. You all are aware about the cost model, revaluation model, because you have covered this in the PPE standard. Friends, as I told you that if you have covered PPE standard, you covered almost 40-50% of intangible asset standard also from the perspective of concepts, right? You covered almost 25-30% of investment property also. So covering one standard will cover at least 100% of, if I combine these two standards, I would say Ind AS 40 and Ind AS 38 put together, you have covered at least one standard. While covering Ind AS 16, you have covered at least one complete standard, okay? So friends, whenever you will revise these standards, so revise PPE standard, then your borrowing cost standard, investment property, intangible asset, this 4-5 standard you have to revise in one go. And you will find that when you are revising one standard, you are simultaneously revising other standard also. Okay. So your revision will be double revision, right? So then we'll touch base on the amortization and useful life of the intangible asset, then derecognition part. Okay. Objective is very simple. This standard prescribe the objective of, this standard prescribe the accounting treatment of intangible asset. Okay. When I say accounting treatment, it includes what? When I say accounting, it includes what? RMPD. Recognition, measurement, presentation, disclosure. Recognition, measurement, presentation, disclosure of intangible assets. Okay. Talking about the scope, this standard covers all intangible asset except negative list is given. Financial asset. So friends, intangible asset. What is meant by intangible? Which you can't see, which you can't touch, which you can't hold, right? Like if I talk about building, you can see, you can touch, you can hold. Furniture, you can touch, you can see, you can hold. I am sitting on chair. Yes, I put my hands on the chair. Okay, I have seated on the chair. I have put my laptop on the table. So I can see, I can touch, I can hold this furniture. This is a PP. But what is intangible, which you can't see, which you can't see? So there are lot many items which are intangible in nature. Are you getting me? Deferred tax asset. Can you see deferred tax asset? It is an asset. But can you see deferred tax asset? Tell me yes or no. No, you can't see deferred tax asset. So if you can't see deferred tax asset, is it an intangible asset? If you can't see deferred tax asset, is it an intangible asset? It is an intangible item. It is an intangible item, right? What is an intangible asset? Which is covered under Ind AS 38. Deferred tax asset is an intangible item. It's an asset which is intangible in nature. Okay, right? So there are lot many intangible items which are assets also. Whether all those intangible items which are assets will be covered as per Ind AS 38, answer is no. While all the intangible items will be covered if it meet the definition of asset, all the intangible item which meet the definition of intangible asset will be covered here except financial asset, exploration and evaluation assets, right? Intangible asset arising from insurance contract, now it is Ind AS 117. Intangible asset covered by another standard such as intangible held for sale, deferred tax asset, lease assets, right of use asset. Can you see right of use asset? No, it is an intangible item, yes, but is it an intangible asset to be covered under Ind AS 38? Answer is no. Asset arising from employee benefit, Ind AS 19. Goodwill. Goodwill is an intangible asset, yes, but the treatment of goodwill is covered by Ind AS 103. Self-generated goodwill is not allowed, right? You cannot say, I am expert teacher. I have to recognize my goodwill for 25 lakh rupee. No, self-generated goodwill is not allowed, right? What is allowed? Purchased goodwill. How goodwill is purchased? Goodwill can be purchased when you buy an entity. When you acquire an entity, goodwill can be purchased, right? So friends, that purchased goodwill, that goodwill arising in acquisition has to be covered by Ind AS 103, not Ind AS 38. And intangible asset held for sale in the ordinary course of business like inventory, asset arising from contract with the customer like work in progress, right? Asset. So these are considered under Ind AS 115. Definition. An asset is a resource controlled by an entity as a result of past events and from which future economic benefit are expected to flow to the entity. Asset. First of all, whether asset is a resource, whether asset is a resource, okay, or means asset is a right or asset is an obligation. Asset is a right. Asset is a right. Okay. Asset is a resource. Resource means a right. Asset is a right. Right to receive something. Okay. Asset is a right. Asset is a resource controlled by an entity as a result of past events. In the past, I have purchased my chair and the table, and that's how I am controlling this chair and table. This belongs to me. Whatever I want to, whatever manner I want to use these asset, I can use these asset. As simple as that. As simple as that. So an asset is a resource controlled by an entity as a result of past events and from which future economic benefit are expected to be flown to the entity. And most importantly, for example, you purchased a machine from China. The moment you want to capitalize the machine, the moment the machine came to India, the machine reaches to the factory, government ban the product from the machine. Now the question is whether machine is a resource. Answer is yes. Controlled by the entity. Answer is yes. As a result of past event, entity has entered into a contract to purchase the machine and paid the consideration. And as a result, machine came to the company, came to the factory, right? But whether future economic benefit is expected from this machine. When I say future economic benefit, means this benefits has to be economically impact to the company. These benefits has to be impact to the company economically. Benefits जो होंगे ये नहीं कि सर मैं उस मशीन को कबाड़ी में बेच दूंगा, मैं उस मशीन को स्क्रैप में बेच दूंगा तो सर मुझे बेनिफिट हो जाएगा. Is that a benefit? You are purchasing an asset for 1 crore rupees. and you are selling it at a bhav of kgs, right? You are selling it on in terms of kilograms, and for 1 crore rupees of asset you are getting 90,000 rupees. Is it a future economic benefit? It is never a benefit. What is benefit? The benefit is spent 1 crore rupee and you will be able to produce the output worth 50 crore rupee, 10 crore rupee. That is a benefit. 1 crore रुपी मशीन परचेज करके उसको 1 लाख रुपए, 90,000 रुपए के कबाड़ी में बेचना, स्क्रैप में बेचना, इज नॉट अ फ्यूचर इकोनॉमिक बेनिफिट. ओके. Yes. Now the time has come to discuss intangible asset. What is an intangible asset? An intangible asset is an identifiable non-monetary asset without physical substance. Three terms are very important in this definition: identifiable, non-monetary asset, without physical substance, right? Without physical substance. These three terms are very, 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 very important. We'll discuss these three terms. 1, 2, 3, right? And monetary asset is defined. Non-monetary asset is very simple definition. What is a non-monetary asset? An asset which is not a monetary asset is a non-monetary asset. Now, what is monetary asset? We will discuss. We will discuss. Okay. So let me take you on my Excel file, and with the help of Excel file, let's discuss the intangible asset definition, right? So friends, as we all are aware, we have an existing accounting standard, which is Accounting Standard 26. AS 26 also talks about intangible asset. The title is same, intangible asset. Friends, in IFRS, we have International Accounting Standard 38, which talks about intangible asset, which prescribes the recognition, measurement, presentation, disclosure of intangible asset. And friends, this Ind AS 38 is a converged version of IAS 38, which prescribes the recognition, measurement, presentation, disclosure of Ind AS of intangible asset. So my dear friends, if I talk about this intangible asset definition, or if I talk about intangible asset, so when we covered Ind AS 1 presentation of financial statement, para number 54 of Ind AS 1 was talking about presenting a separate line item, intangible asset line item, as a separate line item on the face of the balance sheet, on the face of the balance sheet. Okay. So friends, these standards, while I have told you that these standard covers recognition, measurement, presentation, and disclosure on the face of the balance sheet, presentation and disclosure in the financial statement, while these standard talks about recognition very much, measurement very much, disclosure very much, but presentation, these standards are not saying that it has to be presented as a separate line item on the face of the balance sheet. Amortization has to be presented as a separate line item on the face of the P&L. It is coming from Ind AS 1. But yes, when you read this standard, you will be able to know, yes, intangible asset is an asset which is part of the balance sheet. Amortization is an expense which is part of the P&L. Okay, right? But the guiding principle for presentation is Ind AS 1. Okay. Objective scope we have covered, definition of asset we have covered. Now we are covering definition of intangible asset. And what we are covering definition of intangible asset? Intangible asset is an identifiable non-monetary asset without physical substance. So we'll go reverse. We'll discuss without physical substance first, then non-monetary asset, then we will discuss criteria of identifiability. Right? Sounds good? Friends, what is meant by without physical substance? Very simple, means which does not have a physical substance. I have a glass of water. I have glass in my hand. Whether this glass has a physical substance? Of course, yes. That is why I have hold this glass. I have hold this glass, right? So friends, without physical substance, one thing is very clear. If physical substance is not there, right? So there will be no decommissioning, site restoration. Have you remember we discussed while discussing the cost of the PP&E, we discussed one of the element of the cost of property, plant and equipment is provision for decommissioning obligation, site restoration obligation, asset retirement obligation. You remember we have discussed that? ARO, site retirement obligation, asset retirement obligation, right? Yes, decommissioning obligation, we have covered that. Yes, friends. So those kind of site restoration obligation, asset dismantling obligation, asset retirement obligation, this was there in PP&E. But tell me, in while computing the cost of intangible asset, whether these provision for decommissioning obligation, site restoration obligation, whether these kind of obligation will also come into picture. If something which does not have a physical substance, what you will decommission, what you will restore, right? What you will do with that? You can't do anything. Can't do anything, right? So that is why in the cost of intangible asset, you will not find that third element of the cost, which is provision for decommissioning obligation. Because जिसका existence है, उसी को तो आप रिस्टोर करोगे ना, उसी को तो आप डिसमेंटल करोगे ना. जिसका एग्जिस्टेंस ही नहीं, उसको डिसमेंटल कैसे करोगे? उसको तो अनइंस्टॉल करोगे, right? Like you have installed an app on your mobile phone. What you will do, you don't like that app, what you will do, you will uninstall that app. But there is a tower which has put on the rooftop of a house. Now the lease agreement is over. Now this company has to, tower company, telecom company has to dismantle the tower, right? Restore the site, okay? Restore the site, dismantle the tower, restore the site, okay? So this is how this company has to do. So something which does not have an existence, how will you restore it? How will you dismantle it? Okay. So that is why the site restoration, decommissioning obligation will not come into the picture of what? Intangible asset, right? So the first thing is without physical substance, no physical existence like PP&E investment property, we cannot touch, see and hold. Example, computer or laptop in which operating software are there. You bought a software, you bought a laptop. I recently purchased a Lenovo laptop. I purchased this laptop around 3 months back, and all the original Windows and everything was installed in it, right? So friends, I have paid for a laptop. So this entire computer and laptop will be classified as a PP. The question is, I have purchased a laptop which I can see, which I can touch, which I can hold. I fold this laptop, put it in my bag. This laptop is with me. So this laptop is a PP&E, or this laptop is an intangible asset, or whether we should split between PP&E and intangible asset, right? This has to be there. Now the question is, sir, one thing is very clear. It is a PP&E. Now the question is, this laptop is also having some softwares, right? When I bought this laptop, I got the software. Even in this laptop, autopilot, copilot is already, it is auto copilot. Okay. There is a key on the keyboard. When I press that key, my copilot started reflecting. Okay. So friends, the point is, this computer or laptop in which the operating software were already there, is it a PP&E, the entire computer or laptop? Or the entire computer and laptop is an intangible asset, which is less likely? Or this money which I have paid 1 lakh rupee for purchasing of this laptop, whether I need to split it between PP&E and intangible asset? Yes. So friends, if the software is integral part of the hardware, then it will not be capitalized separately. If the software is integral part of the hardware, it will not be capitalized separately, right? For example, this MS window. This MS window is an integral part of the hardware. If that will not be there, I'll not be able to run the laptop. Okay, right? So this is an integral part of the hardware, means the laptop, and hence this laptop will be capitalized as a PP&E, right? It will not be capitalized separately. So this computer and laptop is capitalized as a PP&E. Okay. Now the question is robot. Whether robot is a PP or robot is an intangible asset. Whether robot is a PP or robot is an intangible asset. I can see one students have joined live. Saminathan has joined. Good morning, Saminathan. Yes. Robot is an intangible asset. Friends, while you can see the large robot, okay, the large robot, and nowadays The robot are acting like a servant, assistant, agent, right? So I visited Mumbai. So once a time I visited Mumbai, and I went to one of my relative, and he said, I will, I will. This time, Alok, I will have your meeting with Zoya. I asked, who is Zoya? So he told, come and you will see. So when I was seated in on the sofa in the dining room, right? So in the drawing room, so Zoya came and she handed over a tea to me. So that Zoya was nothing, she was a robot. I said, good morning. She told, good morning, Alok. How are you doing? How's your travel from Delhi to Mumbai? I hope things well, right? So Zoya was a robot. Now the point is how this robot is working. You can see the skeleton, you can see a structure, right? You can see Zoya, she can handshake, right? So the point is whether Zoya is a PP or Zoya is an intangible asset. First of all, it is important to see. It is important to see what is there in Zoya, whether a program is there, right? Or so what is important? Whether the knowledge embodied in the robot is important or skeleton is important, right? Skeleton gives us storage space, right? But what is important? Important is the program, the knowledge embodied in that robot. Have you seen a movie? Have you seen a movie called Teri Baaton Mein Uljha Jiya? Yes. There is a movie of I don't know who is that actress, Kirti Sanan or Kirti, I don't know, right? In that movie, so that actress has played a role of robot, and every day she has to got recharged. Okay, she put so the battery is installed in it, and when it is malfunction, it can destruct, it can destroy also. Okay, so basically, the skeleton is not that, I would say it is relevant, but skeleton is one of the minuscule part. The major part is the knowledge embodied in that robot. Okay. So robot is capitalized as an intangible asset. Telecom company has got a 5G license from Government of India by way of a contract, whether it is a PP or intangible asset. You must have seen the telecom company is giving a license and they are handing over a contract or a piece of paper. Sir, sir, we have a piece of paper, we have a contract, we have a contract also, we have a piece of paper also, right? So whether it will be a PPNE or it will be an intangible asset, the spectrum license is costing 50,000 crore. That piece of paper is worth 50,000 crores. Will you capitalize that piece of paper or will you capitalize the spectrum license? You will capitalize the spectrum license. This piece of paper has given a right to use that license. Okay. So that paper is just a contract, right? To convey that yes, this license is yours for these circle, these states, okay, for this period of time. So it is not an intangible, it is not a PP, it is an intangible asset. Another example, you purchased a software and you know how the vendor or the seller will give you a software, right? Number one, either he will directly using a file, he will directly install the software in your laptop, or he will give you the software in the pen drive. You purchased a tax return filing software. It costed you 50,000 rupees. And that software of 50,000 rupees, how you got that software? You got the software in a pen drive or a compact disc. So friends, while you took the pen drive, you carried it in your pocket and you came to your office, you put the pen drive in your laptop, installed the software and started filing the returns. Now the question is whether this software which you have taken in pen drive, whether it is a PPNE or intangible asset, you know, this pen drive is just a storage device for that software, right? The pen drive is not that material in relation to this entire arrangement. What is relevant? What is material? Software is relevant and material. This pen drive is acting as a storage device. So in this case, this pen drive You will not capitalize the pen drive, okay? Or you will not capitalize, the pen drive and the software separately, okay? You will capitalize this software, right? Because this pen drive is an integral part of the software. This pen drive is only used as a storage device, okay? So this is an intangible asset. What is relevant is very, very important. This is an intangible asset, okay? Yes, yeah. So Mansa, is that clear to you? Manasa? Okay. Yes. Non-monetary asset. Now the second leg, we discussed that intangible asset is a non-identifiable non-monetary asset without having a physical substance. So non-monetary asset, very simple. What is the definition of a monetary asset? An asset which gives a right to receive cash. An asset which gives a right to receive cash into a fixed unit of currency. An asset which gives you a right to receive cash into a fixed unit of currency like trade receivables, loan, cash, bank balance, etc. Okay, friends, an asset which gives you a right to receive cash. Okay, you have an asset. For example, you sold goods to the customer. You know that how much money I have to receive from that customer, right? Because of this credit sales. So the money you have to receive from the customer is like what? It is like, let's say you have sold goods of 1 lakh rupee to the customer. So you have to recover 1 lakh rupee from Mr. X. So this trade receivable gives you a right to receive cash in the fixed unit of currency, means that I have to receive 1 lakh dollar or 1 lakh INR. I have to receive this much of amount. So an asset which gives a right to receive cash into a fixed unit of currency like trade receivables, like loans, cash, bank balance, etc. Non-monetary asset are those assets which are not a monetary asset. Non-monetary asset are those assets which are not a monetary asset. For example, PP&E, investment property, biological asset, inventory. Okay, so these are considered as a non-monetary asset, because if you have a PP, you have a building in which you are living, you have a flat in which you are living, it is a PP&E. Or let's say you have a building in which you are running your office, a company is running its office. Whether running a office, having a building, whether it has given you a right to receive cash into a fixed unit of currency, till the time you have not sold the building, can you say that I have to receive 1 crore rupees from Mr. Ram because I am using this building? Of course, no. Of course, no, right? But if you have given a loan to Mr. Ram, can you say that I have a right to receive 1 crore rupees from Mr. Ram because I have paid a loan to him? Of course, yes. So PP, investment property, biological asset, inventory, these are the non-monetary asset. So we discuss the second part also. What is meant by identifiable? An asset will be considered as identifiable. The definition start with identifiable non-monetary asset without having a physical substance, right? Without having a physical substance. So what is meant by identifiable? Identifiability comes from, identifiable means either it is separable or arising from contractual or legal rights. Either it is separable or arising from contractual or legal rights. Contractual or legal rights. Okay. So the point is, what is meant by separable? What is meant by separable, my dear friends? Separable means this asset can be sold separately, this can be licensed separately, given on lease separately, means without without selling an entity, can this asset can be sold separately, right? Can this asset can be leased out separately without selling an entity? Whether this asset can be sold, can be leased out separately, right? This is the meaning of separable. Sir, can you give me an example? Yes. A company, a company which has a legacy, a company which has a legacy of 50 years, and this company has achieved a great market share. Like Indigo has a 65% market share. Okay. Indigo Airlines has 65% market share because They are into the market consistently and continuously since last 18 years. Almost 18 years have gone since they are operating continuously, right? Now, my friends, since Indigo has a 65% market share, and now Indigo has to sold this market share to somebody else. Okay. Can Indigo sell this market share without selling itself? I mean to say, if somebody will acquire Indigo, for example, of course, this market share will go with Indigo. This market share will go with Indigo. Means if somebody will acquire Indigo, the market share will come along with Indigo, right? But the point is, without selling Indigo, nobody has acquired Indigo. Indigo is still Indigo. Can Indigo told you that Saminathan, you should not travel in my flight? Can you please go to Air India flight? Can you please go to XYZ flight? Can Indigo control you, Saminathan? Of course, no. Indigo does not controls you. It's your wish. It's your marzi. Whether you want to travel through from Indigo, or you want to travel from other airline, or you want to travel from train. So you cannot control customer. Market share comes from the customer, right? So you cannot control customer. You cannot told them, don't use me, use him. Okay. So without selling Indigo, but if somebody X to whom you are referring, right? So Indigo was referring you that please go to X airline. Of course, it's your wish whether you want to go or not go. But this X airline has acquired Indigo. So this X airline has automatically acquired your travel as well, right? So the point is, my dear friends, this market share, customer contracts, okay? So these market share will not be recognized as intangible asset because it is neither arises from contractual or legal right, nor it is separable. Separable means capable of being sold, rented, licensed, exchanged separately from the entire business or entity, okay? Now the second question. For example, Reliance Communication have purchased a license. Reliance Communication has purchased a license from a telecom license from Government of India. Okay, from Department of Telecom, Government of India. Now the question is, this license is non-transferable, and only Reliance can use this license. Only Reliance can use this license, right? Now the question is whether it will be considered as an intangible asset. Whether it is considered as an intangible asset, tell me. Because it is not separable. It is not separable. Friends, the criteria is either it has to be separable or arising from contractual or legal rights, right? It is arising from contractual or legal right, and hence while it is not separable, but it is arising from contractual or legal rights, and hence it has to be recognized as an intangible asset. It has to be recognized as an intangible asset. Okay, is that clear? Is that clear, my dear friends? Yeah. Now coming to the recognition criteria. Okay. So friends, intangible asset has to be acquired when three conditions will met. Number one, future economic benefits should be probable, cost can be measured reliably. These are the basic and standard condition. The same condition is there in investment property. The same condition was there in Ind AS 23 borrowing cost. The same condition was there in the PP&E standard also. The third condition is an important condition. It should meet the definition of intangible asset. Otherwise, the criteria number 1 and criteria number 2 is the same criteria, right? It is the same criteria which is there in the PP&E. So whether I should recognize my building as a PP&E or intangible asset, the criteria is same. And that is why the third criteria was introduced in intangible asset standard. It should meet the definition of intangible asset, means it should meet the criteria of identifiability, it should meet the criteria of non-monetary asset, and it should meet the criteria of without physical substance, okay, right? So my dear friends, now there is a concept of initial measurement. So initially intangible asset has to be measured at cost, but it depends on the mode of acquisition. It depends on the mode of acquisition, right? Intangible asset can be acquired separately. Intangible asset can be acquired by way of exchange of assets. Intangible asset can be acquired by way of business combination. Intangible asset can be acquired by way of government grant. Okay, so let me write all those items. Point number 4, acquired by way of government grant, by way of government grants. Okay, or let's say acquired by way of exchange of assets, by way of exchange of assets. Okay, then by way of government grants, right? Okay, then internally generated intangible asset we will discuss. Internally generated intangible assets, right? Internally generated intangible asset we will discuss. Okay, so these are the ways by which intangible asset can be acquired. By way of separate acquisition, friends, when I talk about by way of separate acquisition, it has to be measured at cost. It has to be measured at cost. Okay, okay, this is what we are going to cover. So cost includes purchase price, including import duties and non-refundable purchase taxes after deducting discount and rebates. Same condition which we have read in PP&E standard. What is my cost? Cost includes purchase price, including import duty and non-refundable purchase taxes. Non-refundable. So you purchased a software, Tally software of 1 lakh rupee, and you paid a GST of 18% on that Tally software. So 1 lakh rupee is the cost. 1 lakh rupee is the cost. 18% is the GST. 18% is the GST. So the total cost is 1 lakh 18,000 rupees. The total cost is 1 lakh 18,000 rupees. So my question to you is whether 1 lakh 18,000 has to be capitalized as an intangible asset or 1 lakh rupee has to be capitalized as an intangible asset. What is your answer? See, you have to before answering on this question, you have to question the question. Number one, 1 lakh rupee, we are very much clear. Purchase price is 1 lakh rupee. We have to add to the cost of the asset. But whether this GST is refundable or this GST is a non-refundable, whether we will be able to get the input credit of GST or we will not be able to get the input credit of this GST. If we will be able to get the input credit of this GST, if we will be able to get the input credit of GST, right? In that case, of course, it is not a cost to me, na? Whatever I paid, I will get the refund, I will get the credit. But if it is non-refundable, I cannot get the input of this GST, it become a cost to me. And when it become cost to me, so this 18,000 rupee of GST will also capitalize as a cost of intangible asset. So purchase price plus import duty plus non-refundable purchase taxes after deducting trade discount and rebates. After deducting trade discount and rebates. And if there is any trade discount rebate, it has to be deducted. Then second one is directly attributable cost of preparing the assets for its intended use. Directly attributable cost of preparing the asset for intended use. What is meant by directly attributable cost? Now we had a lot of discussion on this directly attributable cost in every standard. Directly attributable cost means incremental cost, means an incremental cost, right? The cost which would not have been there if the asset would not have been acquired. If the asset would not have been acquired. Okay. For example, you bought a software. Okay. And for installation of a software, For installation of a software, you have to call an engineer, and this engineer will take a charge of 50,000 rupees for visiting, installing, giving a demonstration, and giving a training. Okay. Now the question is whether this engineer consultancy cost is going to be capitalized. Answer is yes. Why? It is a directly attributable cost. Tell me, if you would not have purchased the software, will you call the engineer for the purpose of demonstration, training and installation? करते क्या खर्चा? नहीं करते ना, नहीं करते. So it is a incremental cost which is incurred because we have bought this asset, because we have purchased this asset. Had we would not have purchased the asset, we would not have incurred this cost, right? So directly attributable cost means the cost which is directly related to the asset, number one. Number two, it is an incremental cost. It is an incremental cost, right? It is an incremental cost which has been incurred because we have spent on the asset, right? Now, let's say you want to buy a tax return filing software and you are doing a market survey. There is a company which gives the results of the market survey, which software is better. You have paid 10,000 rupees to decide which software I should buy. And after that, you bought a software, okay? Computex software you bought for filing return. Now tell me, the 10,000 rupee which you have paid for the market survey, which you have paid for deciding which software I should buy. Tell me whether this 10,000 rupees are directly attributable cost. Answer is no. It is not a directly attributable cost. This cost has not been incurred in connection to the cost of this asset. This cost is not an incremental cost. ये cost तो पहले ही हो गई. This cost is not an incremental cost. Okay, right? This cost would not have been such that this cost would have been avoided if we would not have purchased the asset. This cost has been incurred before purchasing the asset, right? Okay. So have you understood the meaning of directly attributable cost? Friends, if there is any abnormal cost, okay, for example, you were developing an intangible asset and everything was great, right? So after doing a lot of research, right? So, whatever you have, the material which you have applied for development of that intangible asset, the entire material was destroyed. So that cost will be considered as an abnormal cost, and cost will not be part of the intangible asset. Like we also discussed in PPE standard, that the abnormal cost has to be charged to the P&L. It will not be capitalized to the PP&E. Okay. So like cost of employee benefit is a directly attributable cost, professional fee, testing cost. Which cost is not included? The cost for launching a product, advertisement and promotional expenditure. Advertisement. Why advertisement cost? So you have the company like Tata Motors. Tata Motors spent 5 crore rupees in the IPL for branding their Tata Nexon car. So this advertisement, brand promotion expenses, whether these expenses will be capitalized, while Tata believes that they will get a future economic benefit by putting this advertisement. Okay. So will this be capitalized as an intangible asset, advertisement and brand promotion cost? Will it be capitalized as an intangible asset? Answer is no, it cannot be capitalized as an intangible asset. Why? It is not, because you are not controlling the outcome of that, brand promotion or advertisement. It is not meeting the definition of the asset, right? You cannot claim from BCCI that, see, I have spent 5 crore rupees, but my sale has not increased even by 5%. You have to compensate me. No, right? No. So our business, operating a business in a new location or with a new class of customer, administration and other general overhead costs. So these costs are not capitalized. Okay. Friends, Then deferred payment credit, very simple. This slide I have copied from PP slide. Only what I did, I replaced the word PP with the intangible asset. So friends, what is deferred payment credit? Like Saminathan wants to buy a tele software. Saminathan went to store and he asked for this tele software and a price also. The vendor told the price is 1 lakh rupee. Saminathan told, sorry sir, I don't have 1 lakh rupee right now. Can you do one thing? I will pay you after 1 year. Okay. Then the store vendor told, okay, Saminathan, no problem. You can pay me after 1 year, but the price is 1 lakh 10,000 rupees. Sorry, the price was 1 lakh rupee, 1 lakh 10,000 rupees. So tell me, why he shifted the price to 1 lakh to 10,000 rupees? Why he shifted the price to 1 lakh 10,000 rupees? He shifted the price to 1 lakh 10,000 rupees because of the time value of money. You are absolutely bang on, Saminathan. God bless you. So it is absolutely time value of money. It is more like Saminathan has taken a loan from that vendor of 1 lakh rupee, right? And Saminathan will pay 1 lakh rupee to this vendor for purchase of tele software, and Saminathan will also pay interest at the rate of 10%, right? Saminathan took a loan. Took a loan means Saminathan not get the money right now. So he took a loan and that loan was repaid to the tele vendor 1 lakh rupee, and Saminathan will pay after 1 year, which is 1 lakh 10,000 rupees. Okay. So whether this tele software intangible asset has to be capitalized at 1 lakh 10,000 rupees or at 1 lakh rupee, it has to be capitalized at 1 lakh rupee, right? 1 lakh rupee. So your intangible asset has to be capitalized at cash price equivalent. Cash price equivalent, which is 1 lakh rupee. This 10,000 rupee has to be regarded as an interest cost. Right. So what is my deferred payment credit? What is my deferred payment credit? Means a payment which has to be made after a normal credit terms. So the difference between the total payment, which is 1 lakh 10,000 rupees, and cash price equivalent, which is 1 lakh rupee, has to be treated as an interest cost. Has to be treated as an interest cost. Okay. Right. So friends, let's do a question. So let me open my Word file. I hope my Word file is visible to all of you. Is it visible? Not visible? Please tell me. It is visible. So we'll do some more questions from the Word file. Okay. As promised with you. So we discuss the concept, guys. See, even though if you have little bit gone through with the full class, even though if you're attending this revisionary classes, you will be able to revise your concepts along with the complex questions also. Let's discuss question number 7. A company engaged in the provision of information technology products and services incurred following expenditure during the development phase of its software product that is to be offered to its customer. So a company is incurring some cost. Okay. The company is IT company, so engaged in the development of the products and services. The entity also purchases software from third parties for incorporating into its end software product offered to its customers. The entity also purchases software from third parties. The entity also purchases software from third parties for incorporating into its end software product offered to its customers. Okay. So entity used to purchase software also, right? And as a raw material, an entity put this software into the end software product, into the finished goods, right? Offered to its customer. So software, the final software is a finished goods to them, and this interim software is a raw material to them. The company is in the process of launching it in the market for licensing to customers. The company also takes The company is in the process of launching it in the market for licensing to customer. The company also takes services of external professional software developers for such software development purposes. So this company is buying software, right? This company wants to launch the final product for licensing. This company is taking a consultancy services from the professional developers. Okay. Cost incurred in relation to the development of its software product for the year ended 31st March 20x2 are as follows. Okay. Cost incurred in relation to the development of its software product for the year ended 31st March 2002 are as follows. Purchase price of imported software is 600,000, right? Employment cost, some note number 1 is given, we'll read that, 1200,000. Testing cost is 1800,000. With our limited knowledge, first of all, tell me whether this purchase price of the imported software will become part of the cost of the asset? Yes or no? Whether it will become part of the cost of the asset? Yes or no? Yes, it will become part of the cost of the asset. Yes. Yes, Aminathan. Yes. Yes, it will become part of the cost of the asset. Whether employment cost will become part of the cost of the asset? Yes. Whether testing cost will become part of the cost of the asset? Yes. I'm not saying what amount. Friends, what I said, I am talking about the particulars. I'm not talking about the amount because some indications are coming. Some note number 1 is there. We'll read that. Other costs directly related to customization. Whether this customization cost, whether this other cost directly related to customization, whether it is part of the cost of the asset? Yes, it will also become part of the cost of the asset. Yes. Professional fee paid for external software developer, whether it is part of the cost of the asset? Yes. Cost of training provided to staff, cost of training provided to staff to operate the asset. Tell me whether it is going to be capitalized or not. Cost of training given to the staff, cost of training given to the staff to operate the asset. If the training will not be provided to the staff will not be able to operate the asset. Whether it will be capitalized or it will not be capitalized. Yes. See, we discussed that training cost. Training cost will not be capitalized. Why? Because you're not controlling staff, right? We discussed one question, Saminathan. We discussed one question in our full class where we said that we have given the GST India's training to the staff to perform efficiently and effectively. Yes. So expenditure on training cost, expenditure on training cost of staff, expenditure on training cost of staff will not be capitalized. Training cost will never be capitalized. Yes. Cost of advertisement, capitalized, not capitalized? No. Administrative and general overheads, no, right? So these three no's are absolutely there, but about the why, yes, let's understand it. First of all, let's discuss note number 1, note number 2. The software was developed in 9 months ended 31st March 2001 and was capable of operating in the manner intended by the interns, that is up to 31st March 2002. The employees were engaged in developing the software and the related activities. The software was developed in 9 months ended 31st December 20x1 and was capable of operating in the manner intended by the entity. It was brought into use on 31st March 20x2. The employment cost for the period of 12 months, that is up to 31st March 20x2, right? The employees were engaged in developing the software and related activities. Friends, this cost of 1200,000 is for 12 months. This cost of 1200,000 is 12 months. And the software was developed in 9 months. So whether we should capitalize the entire 12 month of employee cost or we should capitalize only 9 months of employee cost? We should capitalize only 9 months of employee cost. If 1200 is for 12 months, then for 9 months it is 900. Then in other cost relating to customization, some note number 2 is also there. Other costs directly related to development include an abnormal cost of 50,000 in respect of repairing the damage which result from a security breach. This other cost of 4,50,000, this include 50,000 of abnormal cost. So whether we should capitalize entire 450 or we should capitalize only 400,000. Whether this abnormal cost is subject to capitalization? Answer is no. We should only capitalize 400,000, 450 minus 50. What will be the amount? What will be the amount of the software development cost that can be capitalized by explaining the reason for each element of the cost? right? Each element of the cost. So friends, let's go to the elements. Purchase price of the imported software 600 rupee has been 600,000 has been spent, and yes, it will be capitalized. It will be the entire money will be capitalized. The cost of material or services used or consumed in generating the intangible asset and any directly attributable cost of preparing the asset for intended use has to be capitalized. Employment cost, it is for 12 months, so 9 months employment cost has to be capitalized. Employment cost for the period of 9 months are directly attributable cost. Therefore, the cost to be capitalized is 900,000 for 9 months as the asset was ready for intended use by that time. It is assumed that 100,000 is equally incurred each month. Capitalization of eligible cost should cease when the asset is capable of operating in the manner intended by the management. Testing cost. Testing cost is 1800, so this entire 1800 is going to be capitalized. Other costs relating to customization 450 was incurred, but capitalization should happen only for the 400,000. The 50,000 of abnormal cost is to be excluded. Professional fee, entire professional fee is going to be capitalized. Training cost not to be capitalized. Advertisement cost not to be capitalized. Administration general overheads not to be capitalized, right? Accordingly, out of 68 lakh 50,000 rupees, 39 lakh 20,000 rupees is going to be capitalized. Okay. Remaining cost has to be charged to the P&L. Remaining cost has to be charged to the P&L. Okay. Clear? Perfect. Perfect, my dear friends. Now, I'm moving to the next part, exchange of assets. Friends, we discuss separate acquisition, deferred payment terms. Now we'll discuss exchange of asset first, then we'll discuss business combination. Okay. Yes, exchange of assets. Friends, if the transaction is having a commercial substance, if the transaction does not have, what is meant by exchange of asset? Barter. Barter is considered as an exchange of assets. If the transaction is having a commercial substance, the asset acquired will be recognized at a value in the descending order. Okay. The asset acquired will be recognized at a value in the descending order. Okay. For example, so let me repeat that. So if the transaction does not have a commercial substance, means you are exchanging the same assets, okay, with another. If the transaction is not having a commercial substance, then whatever asset you have given up, okay, so WDV of the asset given up will become the cost of the asset acquired, will become the value of the asset acquired, right? But what happens if the transaction is having a commercial substance? Means the risk, the timing is different for both the assets. Okay. Friends, in that case, you have to follow some guidance, just like a PPNE. Okay. So first of all, you ask a question, whether fair value of the asset given up, which you are giving as a consideration. Friends, if you go into the market and you purchase a tele software and you paid 1 lakh rupee of cash, what you have given? You have given a cash. What is a cash? Cash is an asset. So this is also a barter, na? You have exchanged one asset in return of another. You have given your cash asset and you got a software, right? So in that case, at what value? At what value you are capitalizing your asset acquired? You are capitalizing your asset acquired on the basis of fair value of the asset given up. What you have given as what you have given 1 lakh rupee cash. Saminathan, what is the fair value of the 1 lakh rupee cash? What is the fair value of 1 lakh rupee cash? The fair value of 1 lakh rupee cash is 1 lakh rupee only, right? So instead of cash, I am giving some asset. I am giving some asset. Now tell me, what will I'm buying a tele software and I'm not giving I'm not giving a cash. I am giving my mobile phone. I am giving my mobile phone. I am giving an asset. Swaminathan, what will be the cost of asset acquired? Again, fair value of the asset given up. Like earlier, we have also did at fair value of the asset given up, which was 1 lakh rupee. So I will compute fair value of mobile, right? So whatever will be the fair value of the mobile, for example, fair value of the mobile is 80,000 rupees. 80,000 rupees will become the cost of the asset acquired. If the fair value of the asset given up, yes, it is available. Okay. Major intangible asset acquired at fair value of the asset given up. In case fair value of the asset given up is not available, then you need to ask whether fair value of the asset acquired is available. Yes, it is available. Major intangible asset acquired at fair value of the asset acquired. In case the above is also not available, then intangible asset acquired will be measured at carrying value, which is WDV of the asset given up, which is WDV of the asset given up, right? Okay. Sir, if both the values are given, then if fair value of the asset given up is also given and fair value of the asset acquired is also given, then what is the first priority? पहली प्रायोरिटी क्या थी आपकी? Fair value of the asset given up. You are right. You are right, Saminathan. Yes. Now, friends, let's do a question from this word file. Yes, Sun Limited, Moon Limited, Earth Limited. Okay. Question number 1. This question is on exchange of assets. Okay. No problem, Saminathan. If your mic is not working, no problem. You are giving all the responses on the chat box. Great. Okay. Yes. Sun Limited acquired a software from Earth Limited. Sun Limited acquired. Sun Limited acquired means Sun Limited has acquired a software. Okay. So we are doing the accounting in the books of Sun Limited from Earth Limited. So Sun Limited purchased a software from Earth Limited. Okay. In exchange for a telecom license. In exchange for a telecom license. So Sun Limited acquired a software and given a telecom license, means an intangible asset has been exchanged. An intangible asset has been exchanged with the another intangible asset. Okay. Sun Limited acquired a software from Earth Limited in exchange for a telecom license. The telecom license is carried at 5 lakh rupee in the books of Sun Limited. The telecom license is carried at 5 lakh rupee in the books of Sun Limited. The software is carried at 10,000 rupees in the books of Earth Limited, which is not the fair value. The software is carried at 10,000 rupees in the books of Earth Limited, which is not the fair value. Okay, which is not the fair value. So friends, Sun Limited acquired a software from Earth Limited. Okay. The telecom license is carried at 5 lakh in the books of Sun Limited. So right now, Sun Limited is carrying a telecom license and the WDV of the telecom license is given. The WDV of the telecom license is given. Okay. The software is carried at 10,000 in the books of Earth Limited. So this carrying value of the software is also given in the books of the Earth Limited. Okay. So WDV of both the intangible asset has been given respectively in both the books of accounts, Sun and Earth. Past journal entries in the books of the Sun Limited and Earth Limited, right, in the following situation. The guidance number one, if the question will come in exam, where the question is asking you the journal entries from both the perspective, Sun Limited perspective as well as Earth Limited perspective. Solve this question only considering one entity at a time. Otherwise, there are 99% chances your answer will become wrong. There are 99% chances. So, first of all, we will not talk about Earth Limited. We will only be talking about Sun Limited, right? We have to do the accounting in the books of Sun Limited. So, please confine yourself, please restrict yourself only to one entity, which is the Sun Limited. Sir, which entity we should take first? So द जिसका नाम पहले आया उसका उस एंटिटी का पहले आप अकाउंटिंग करो, राइट? यस. So we will discuss in the books of Sun Limited. So friends, what is the carrying amount? What is the carrying amount of intangible asset in the books of Sun Limited? Sun Limited is carrying a telecom license. Sun Limited is carrying a telecom license. What is the WDV of the telecom license in the books of Sun Limited? WDV of telecom license in the books of Sun Limited is 5 lakh rupee. This is what it is given. Okay. Now, can we pass the journal entries? Can we pass the journal entries one by one? Fair value of software is 5,20,000. Fair value of software. What is this fair value of software? Fair value of asset acquired. And fair value of telecom license is 5 lakh rupee. Fair value of asset given up is given 5 lakh rupee. From the perspective of Sun Limited, again I'm telling you, forget about Earth Limited. So for Sun Limited, he is acquiring a license, he is acquiring a software, and he is giving a license in terms of consideration. So what is the fair value of the asset given up in the books of Sun Limited? Fair value of telecom license given up is 5 lakh rupee. So which should I consider? What I consider? Whether I should consider fair value of the asset acquired or fair value of the asset given up? Software or license? License. So what should I pass an entry? Software has to be capitalized because my asset acquired is software. So software account debit to telecom license. Why I did two telecom license? Because I am giving telecom license, acquiring software. Software account debit to telecom license. But what is the value? The value is 5 lakh rupee. Software account debit to telecom license account 5 lakh rupee, right? To profit on exchange, which is 0, right? Now the second question. Fair value of software is not measurable. Fair value of asset acquired is not measurable. Doesn't matter. But similar telecom license is transacted by another company at 4.9, means the fair value of the asset given up is given. Sir, वही तो चाहिए था. Sun Limited के केस में तो वही चाहिए. Fair value of the asset given up is how much? 490. So at what value we will recognize, we will measure the asset acquired? Software account debit to loss on software account debit to telecom license. So software account debit 490 to telecom license 500,000. Sir, why you are crediting telecom license for 5 lakh rupee in every case? Because my WDV of the telecom license is 5 lakh rupee. The telecom license which I am carrying in my books of account is 5 lakh rupee. Is 5 lakh rupee. Okay. So अगर मुझे उसको डी रिकॉग्नाइज करना है तो जो WDV है उसी पे तो करना पड़ेगा ना. So telecom license I'll credit by 5 lakh rupees, software I'll debit by 490. The loss on exchange of 10,000 rupee will be debited to P&L. Is that clear? Okay. Third, neither the fair value of software nor telecom license could be reliably measured. Third situation. The fair value of neither the asset given up nor the asset acquired is there. Then what should I do? Again, WDV of asset given up. WDV of asset given up is 5 lakh. So software account debit to telecom license 5 lakh rupee. No profit, no loss. Okay. We completed this. Now let's see from the lens of Earth Limited. Forget about Sun Limited. Earth Limited. Okay, sir. Earth Limited is acquiring a telecom license and Earth Limited is giving a software. Yes. Now, what is the WDV of the software in the books of Earth Limited? WDV of software in the books of Earth Limited is how much, Saminathan? 10,000 rupees, 10K. Okay. So, WDV of software in the books of in the books of Earth Limited is 10,000 rupees. It means the asset given up is software and the asset acquired is telecom license. So in every entry, telecom license, which is asset acquired, will be debited, and in every entry, software will be credited. And in every entry, software will be credited by WDV because you have to de-recognize, right? Okay. So first point, you have to pass the journal entries in the books of the Earth Limited. Fair value of the software is 520, means fair value of the asset given up is 520, and fair value of the telecom license, fair value of the asset acquired is 5 lakh rupee. So which should I consider? Fair value of asset given up I should consider. So fair value of asset given up is how much? Fair value of asset given up is 5,20,000. So telecom license debit 5,20,000. To software credit on WDB 10,000. To profit on exchange 5,10,000. To profit on exchange 5,10,000 rupees. Okay. Second, fair value of software is not measurable, means asset given up is not measurable. But fair value of asset acquired is measurable. Then go for the fair value of asset acquired. So telecom license account debit 490, which is fair value of asset acquired. Credit software by 10 and profit on exchange is 480. Neither the fair value of software nor telecom license can be reliably measured. Neither. Okay, then you have to measure at WDV of asset given up, which is 10,000 rupees. So telecom license account debit 10,000 rupees to software 10,000 rupees. As simple as that, right? Is that clear? Is that clear, my dear friends? Yes? Yeah? Okay, so we cover exchange of assets also. Now we are going to cover the next part. We are going to cover the fair value portion. We are going to cover the fair value portion. Okay? Let's discuss the fair value portion. Fair value portion means when the asset has to be acquired at fair value, means when the asset has to be acquired on the basis of business combination, right? When the asset has to be acquired in business combination. For example, a company has acquired another company. While acquiring another company, the company has also acquired some intangible asset. Some intangible asset was there, right, in the transferor company, which this acquirer company or transferee company has acquired. So the cost in that case, the cost of that intangible asset, right, which arises in the business combination, the cost of that intangible asset will be recognized at fair value. Okay, on the acquisition date. So intangible asset is recognized separately from goodwill if fair value is measured reliably, and even if those intangible asset has not been recognized by the acquiree in the books of accounts. If it has not been recognized by the acquiree in the books of accounts. Okay. So intangible asset is recognized separately from goodwill if fair value is measured reliably, and even if those intangible asset has not been recognized by the acquiree in the books of accounts. Friends, first of all, two things are very important, and while discussing these concepts, we are discussing the concept of business combination also, right? Let's say Toyota, let's say I'm just giving a hypothetical example. Toyota has acquired Maruti. Toyota has acquired Maruti. Okay. Maruti has a largest distribution network in the country, in India. Maruti has a largest distribution network in the country. You can find the Maruti service center. You can find the Maruti mechanic everywhere. You can find. Okay. So the net assets of the Maruti, means I am talking about the tangible valuation of Maruti. The net assets of Maruti is 50,000 crore. Now, first of all, tell me whether net assets of Maruti is 50,000 crore, whether the fair value of the Maruti will also 50,000 crore, whether Maruti will sell, whether the promoter of Maruti will sell Maruti at 50,000 crore rupees only, or beyond that, or beyond that. Of course, beyond that, because why Toyota will ready to pay the premium to the Maruti? Toyota has to, Toyota has to create a pan-India presence. And if Toyota has to create a pan-India presence, just think about if Toyota has to open a service center, a repairing center, a showroom in the hills, right? In some remote areas, Toyota will take lot of time. Number one. Number two, Toyota will incur lot of capex cost, right? Toyota need lot of mechanics and the workers. So Maruti is giving Toyota by acquiring a Maruti, it is giving a free hand to Toyota to operate in abundance. When I say to operate in abundance, means Toyota can immediately operate on a pan-India basis, right? By acquiring a Maruti. So Toyota will pay a premium to the Maruti. So when Toyota is paying a premium to Maruti for this infra also, premium I am saying. So the net assets value was 60,000 crore. Toyota has paid 50,000 crore net assets value. Toyota has paid 60,000 crore. 60,000 crore. Friends, this 10,000 crore will be recognized, will be capitalized as a goodwill, or or Toyota will recognize that Toyota will recognize this distribution network as an intangible asset in their books of account. So Ind AS 103 says that while Maruti has created its distribution network as per the legacy of the time, as per the legacy, Maruti has never capitalized this distribution network. Why? Because it is self-generated. But even though if intangible asset has not been recognized, or intangible asset is not recognized in the books of the acquiree, but acquirer can recognize those intangible assets because acquirer is paying a premium for that, right? So in addition to goodwill, as per Ind AS 103, this new intangible asset can be recognized. Sir, what is the cost of that new intangible asset? You don't know the cost, so it has to be recognized at fair value, right? Now, let's say the fair value, and these are business valuers who are the experts. These business valuers are doing the fair valuation of the business, okay? So the business valuers have given the valuation of this distribution network as 5,000 crore, or let's say 7,000 crores. Okay. So the net assets was 50,000 crore. This fair value of the new intangible asset is 7,000 crore. Consideration paid is 60,000 crore. Now, what is the balancing figure? 3,000 crore. This will be capitalized as a goodwill. This will be a purchased goodwill. Goodwill. Okay. Now let's discuss a question on this from the Word file. I hope the Word file is visible. Just a minute. Just a minute. I need to see if the fair valuation question is there or not. Yes, question number 5. X Limited is in the business of publishing journal. X Limited is engaged in the business of publishing journal. Okay. Okay. They acquired 100% stake in Y Limited, means they acquired Y, a company in the same industry. X Limited has paid a purchase consideration of 10 crore, 10 100 lakhs, 10 crore. Okay. And fair value of net assets acquired is 8 crore 50 lakh. The purchase consideration includes payment for the following as well. So what is the total payment? The total payment is, what is the total payment? The total payment is 10 crore rupee. Okay. So purchase consideration is how much? My purchase consideration is rupees in crores, 10 crore, less net assets. Net assets is how much? 8.5 crore. The purchase consideration includes payment for the following as well. 30 lakh rupee has been paid for obtaining the skilled staff of Y Limited. 30,000 rupees has been paid, 30 lakh rupee has been paid for the skilled staff, okay. So because the staff was experienced and the company has paid 30 lakh rupee for that, okay, right? So 30 lakh rupee has been paid for the skilled staff, right? So whether the skilled staff is meeting the definition of intangible asset, whether the skilled staff is meeting the definition of intangible asset, yes or no? The skilled staff cost, is it meeting the definition of intangible asset? Yeah? No, it is not meeting the definition of intangible asset. Okay. So the skilled staff is not required to be separately capitalized. Okay. The skilled staff is not required to be separately capitalized. Okay. So you have to ignore this. Means in the purchase consideration, the company has paid a premium. So basically this 30 lakh will not be separately capitalized. So it will form part of the goodwill only. Okay. 50 lakh has been paid by way of payment towards non-compete fee so as to restrict Y Limited to compete in the same line of business for next 5 years. Non-compete fee. Whether this non-compete fee is going to be capitalized? Yes. Yes, because it is arising from the business combination. So while this Y has not recognized, but X has to recognize. Okay. So less non-compete fee 0.5 crores, less skilled staff cost not to be capitalized separately. Okay. Now then, however, the above item A and B are not forming part of the net assets acquired. Okay. These items are not part of the net assets. So we already considered that. Determine how the above transaction should be acquired. So purchase consideration is 10 crore. Now your net assets and non-compete fee is 9 crore. So what is your goodwill? What is your goodwill? The remaining resultant number is goodwill. Goodwill is how much? Goodwill is 1 crore. Goodwill is 1 crore, right? 10 minus 9, goodwill is 1 crore. Is that clear? Goodwill is 1 crore, okay? So what it is written, X Limited should recognize an intangible asset in respect of the consideration paid towards non-compete fee. However, amount paid for obtaining skilled staff amounting to 30 lakh does not meet the definition of intangible asset, and hence X Limited has not established any right over the resource and the same should be expensed. The entity has insufficient control over the expected future economic benefit arising from the team of skilled staff. Therefore, 50 lakh rupee will be separately recognized as an intangible asset, whereas amount paid for obtained skilled staff does not meet the recognition criteria for being identified as a separate intangible asset. However, since it is part of a business combination, it will form goodwill recognized at the acquisition date. Okay. So this 30 lakh has been given for just to confuse you. You know, many students what they did, they said, okay, 10 crore rupees is the total amount which this entity has paid. 30 lakh rupee is on the account of staff cost. So what should I do? I should expense of 30 lakh rupee in the P&L and 9 crore 70 lakh rupee they have considered for purchase consideration. No, this is just to confuse you. भाई आपने क्या किया, नेट एसेट्स 8.5 करोड़ का था, you have paid 10 crore. Why you have paid extra? You have paid 50 lakh rupees for the fair value of the non-compete fee was 50 lakh rupee. This staff cost cannot be capitalized. Means whatever extra money you have paid, that is goodwill. As simple as that. अकाउंटिंग स्टैंडर्ड में क्या करते थे? अकाउंटिंग स्टैंडर्ड में यू आर नॉट आइडेंटिफाइंग why the one entity has paid a premium in acquiring the another entity. You're not finding the reason. But in India, it's a substance based standard. You are finding the reason why X Limited has paid extra money to Y Limited. Why? Okay, it is due to staff cost. No, not to be capitalized. So it will form part of goodwill. Yes, it is non-compete fee. Okay, please compute the fair value. Are you getting me? In accounting standard, entire money goes to the goodwill, right? But in Ind AS, you have to identify what are the assets which are giving the synergies and energies. Okay, what are the assets which are giving benefits? The assets which are giving benefits you have to capitalize separately, and the other has to become part of the goodwill. Okay, so friends, this is what we have seen in terms of this. In terms of this intangible asset acquired by way of business combination which has to be recognized at fair value. Friends, it's 8:27 now. Let's have a break and we will start at 8:40. Okay, because we'll start with the new concept. Okay, break start. the intangible asset acquired by way of a separate acquisition or by way of incurring cost, right? So we covered that part and we did question number 7 on this. Then we covered the deferred payment credit, right? Then we discussed intangible asset in exchange for the another asset, right? Acquired in exchange for another asset. We did question number 1 on sun and earth as well. And then we covered intangible asset acquired by way of business combination. And we understood that in case of business combination, so we have two major intangible asset at fair value. The cost of intangible asset acquired has to be measured at fair value. Okay, right? So the intangible asset which is arising in business combination has to be measured at fair value. So now we are going to cover intangible asset acquired by way of government grant, right? Intangible asset acquired by way of government grant. So friends, if I talk about intangible asset acquired by way of government grant, what does it mean? For example, at times, what government does, at times government promote Indian industries, promote companies that please come and install your factory in the remote area so that the livelihood can be better, right? So that the employment opportunity can grow, okay? And in return, government says that what I'll do, I'll give you some licenses free of cost, right? I'll give you an access of the nearest airport free of cost. Means you come by your helicopter, your private charter planes. So basically, we will give you free landing rights. So normally, whenever the aircraft land, the airport authority, charges on those airport landings. Okay. So, but now government is giving free lending rights. I am giving you free lending rights for the next 5 years, for example. So, if intangible asset is arising, if intangible asset is a company is getting an intangible asset, intangible asset acquired by way of a government grant, so either it has to be a free of cost, right? When government is giving it as a grant, either it is free of cost or it is at a concessional price, discounted price. Okay, गवर्नमेंट या तो फ्री में देगी या डिस्काउंटेड प्राइस में देगी ओके सो देर आर टू ऑप्शंस in terms of Ind AS 38 there are two options of accounting and these two options are coming from Ind AS 20 only accounting for government grant. The first option is recognize both the government grant and intangible asset at fair value. For example, government has provided free mining right to the company for 5 years, free mining rights. The fair value of such right is 5 lakh rupee. First of all, government has given it free of cost. Whether the company will incur any cost? Is there any cost attached to it? Answer is no. There is zero cost, zero cost. But company wants to capitalize it, this mining right intangible asset at fair value. So company will debit mining right intangible asset account, debit 5 lakh rupee. But what company will credit? Company has not paid any cash. Company is not obligated to pay any cash. So company will not credit any liability. Okay. Company will not credit any cash. So what company will credit? Company will debit mining rights intangible asset account, debit to deferred government grant. So company will recognize a government grant, deferred government grant. A notional liability company will create a notional liability, right? Sir, if it is a notional liability, how it will be reversed? We'll discuss. Okay. So mining rights intangible asset account debit to deferred government grant at the time of acquiring rights. So asset 5 lakh rupee, liability 5 lakh rupee, balance sheet tally on the day one, double entry system tallied on the day one. Now, sir, now you have capitalized this 5 lakh rupees since government is given a right for 5 years. So how this asset will become zero and how the liability will become zero, my dear friends, we will amortize asset, intangible asset over a period of 5 years. Amortization account debit to accumulated amortization or to mining right intangible asset, 1 lakh rupee. Okay. Sir, 1 lakh rupee expense we have recognized. Okay, very good. Sir, what about this deferred government grant, my dear friends? This deferred government grant, which you have shown as a notional liability, it is actually not a liability. Means company is not obligated to return this money to the government, right? So what happened? What this company will do? The company will also amortize the government grant. Since it is a liability, it will create an income. So Deferred government account debit 1 lakh rupee to other income 1 lakh rupee. So you can see at the same time, like this transaction was giving a same value of assets and liability, this transaction is also giving income and expenses with the same amount. Income and expenses with the same amount. Okay. Income and expenses with the same amount, right? Now option number two. Option number two. Recognize intangible asset at nominal cost plus directly attributable cost if any. Recognize intangible asset at nominal cost plus directly attributable cost if any. Right? So you have to recognize intangible asset at nominal cost plus directly attributable cost if any. For example, government has given free mining right to the company but will charge rupees 1 lakh for its registration. The government will charge only registration fee, right? So in this case, what you will do with this registration fee? Mining right intangible asset account debit to bank account 1 lakh rupee. So this asset, this mining right intangible asset has to be capitalized at zero purchase price plus directly attributable cost, which is 1 lakh rupee, right? Assume there is no registration charges, then you need to recognize intangible asset nominal cost plus directly attributable cost. Directly attributable cost is zero. The purchase price is zero. You have to recognize a nominal cost, no registration charges. Then mining right intangible asset account debit 1 rupee 1 to other income rupee 1. Mining right intangible asset account debit 1 to other income rupee 1. Right? Clear? Yes? Very simple. Now, the next part is internally generated goodwill. My dear friends, internally generated goodwill. Capitalizing an internally generated goodwill is a crime. Right? So, you cannot capitalize internally generated goodwill. Okay? The recognition is prohibited in Ind AS 38. Capitalizing an internally generated goodwill is just like an arrogance. You are appreciating yourself. You are appreciating yourself, right? Other one is not appreciating. You are appreciating yourself. Okay? So internally generated goodwill, you are not required to capitalize internally generated goodwill, right? It cannot be kept. It is prohibited. Okay. But if a company is acquiring another company and the purchase consideration is more than net assets, result is goodwill. Whether that goodwill can be capitalized, it is a purchased goodwill. It is not a self-generated goodwill. Now, coming to the king of all the models, all the mode of intangible asset, internally generated intangible assets. Friends, while internally generated goodwill is not allowed to be capitalized, but there are a lot of internally generated intangible assets. For example, in pharmaceutical company, like due to COVID, during the COVID time, they were searching for a formula. They were searching for a formula for the COVID vaccine, right? So they are searching antivirus for killing this COVID virus. Okay. So friends, what happened? They were doing a lot of research. They were doing a lot of research. So the point is, if a company is generating some intangible asset internally, the company is, the company is developing some processes. So if there is an internally generated intangible asset, how this internally generated intangible asset has to be capitalized? How this internally generated intangible asset has to be measured? What is the journey of internally generated intangible assets, right? What is the accounting treatment of internally generated intangible assets? Okay. So this is same like accounting standard 26, right? It says that internally generated intangible asset has to be bifurcated into two phases, research phase and development phase. Research phase and development phase. Research phase is acquisition of knowledge and development phase is application of knowledge. What is research phase? Acquisition of knowledge. What is development phase? Application of knowledge. Okay, application of knowledge. So in the research phase, right? In the research phase, you are acquiring knowledge. You are only acquiring knowledge. Okay. Like you are preparing for CA final examination. So while doing an article shape, while clearing a CA final paper, what you are doing, you are acquiring a knowledge, right? You guys are reading eight I would say subject like tax, MAFA, financial management, tax, financial reporting, audit, direct tax, indirect tax, costing. So many subjects are there, so many subjects are there. But the point is, do you think when you reach to the corporate life, will you practice all these 8 subjects? Will you practice all this subject? You will do costing also, you will do financial management also, you will do direct tax also, you will do indirect tax also, you will do audit also, you will prepare balance sheet also. Of course not. And audit and preparation of balance sheet is conflicting role. वो तो हो ही नहीं सकता. So why after becoming a chartered accountant, why you are confined to 1 or 2 or 3 subject? I'm talking about practicing the stream, 1 or 2 or maximum 3 streams, but in CA final you are learning eight subjects, 8 different papers. Why? Because you are acquiring knowledge. When you acquire knowledge, it gives you a lot of permutation and combination. It creates a wisdom within you, right? It creates a clarity within you. You are able to relate the impact at different places of one transaction, right? You will become a complete chartered accountant. You will become a 360-degree chartered accountant. You will become a complete professional, right? So that is why when you are acquiring knowledge, right, when you are preparing for CA final exams, you are acquiring a knowledge. But when you clear, you will apply a knowledge. So when you acquiring a knowledge, you will be able to know, oh, I am liking FR very much. Oh, tax is less of my interest. Okay, I score 92 marks in FR. Just I'm giving you example. Okay, so I want to join financial reporting team of a large listed company. Okay, so now your life is now you are very clear that either I have to join some audit department in Big Four, or I have to join financial reporting vertical of a large listed company. Means CA, up to finalizing the CA exam, you are going into a research phase. You are learning everything, you are acquiring knowledge. But once you become a chartered accountant, you are applying a knowledge, right? So when somebody looks at you as a student, somebody says that you are a student, okay, you are a student. But every professional is a student in its entire life. Even you, when you become a chartered accountant, you will always continue to be a student. But the point is, nobody will call you as a student. But since the time you are not clearing your CA exam, you will be qualified as a student, okay, not a professional. So the point is, sir, what happened in just one night or one fine morning? Till the yesterday night we were student, and today morning result came, we passed, we qualified, now we become professional. So what changed overnight, right? What changed overnight is the wisdom which changed overnight. Whatever the knowledge you have acquired so far, now from today you are going to apply the knowledge. People will look at you as a chartered accountant, sahab. People will look at you as a chartered accountant. They will ask you, sir, can you give me this suggestion? Right? Your relative will tell you are a chartered accountant. हम आप हमारी रिटर्न फाइल कर दो, हमारी बैलेंस शीट बना दो. Prepare my balance sheet, file my return. What is the rate of GST? How I will save my GST? People will start asking these questions to you. Why? Because you are a chartered accountant. Means they believe you acquired a lot of knowledge during your articleship, during your examination preparation for foundation, inter, and final, and now you just want to apply the knowledge. Likewise, my dear friends, in the life of the internally generated intangible asset, there are two phases: research phase and development phase. When you acquire a knowledge, it is known as a research phase. When you apply a knowledge, it is known as a development phase. It is known as a development phase, right? It will be known as a development phase. Okay. Is that clear? Is that clear, my dear friends? I hope it is clear. Yes. So this is research phase and this is development phase. Okay. So research phase. Research phase means, again, research phase means you are acquiring knowledge. Means whatever expense you are incurring, okay, that will be charged to the P&L. Whatever expense you are incurring, that will be charged to the P&L, right? And in the development phase, whatever amount you have spent in the development phase shall be capitalized. Whatever amount you have spent in the development phase shall be capitalized. Okay, is that clear? Is that clear? Yes. Great. So friends, now, sir, Research phase is going on, going on, going on, going on. It is going and going and going and going. Sir, when the entity will demonstrate that the development phase is started? So there are 6 conditions given in the standard. The condition is known as pirate, probable. So when entity will be able to demonstrate if following conditions are met, when the entity will be able to demonstrate that it is probable, now we have more than 50% probability, 50% chances that we will be able to receive future economic benefit, right? Then there is an entity's intention also to complete the asset or to use and sell the asset, right? So whatever intangible asset will become ready, it is intent of the company to complete the intangible asset. So whatever internally generated intangible asset is going on, right? So entity has an intention to complete and use or sell the asset. Third, the entity has enough resources to complete the asset also. Okay. Fourth, the entity has the ability to use or sell the asset. Fifth, there is a technical feasibility. There is a technical feasibility, right, that this asset will be viable to complete, and expenditure can be measured reliably, cost can be measured reliably. The first condition and the last condition is a condition of the normal asset recognition condition. Future economic benefits should be probable, cost can be measured reliably. Future economic benefit shall be probable and the cost can be measured reliably. Okay, cost can be measured reliably, right, friends? Okay, okay, clear? Okay, so let's coming to the example. Let's coming to the example. A Limited has started doing a research for a medicine on 1st April 2019. The company has spent 50 lakh rupee till 31st May 2021. Okay. A Limited has started doing a research for a medicine on 1st April 2019. A Limited has started doing a research for a medicine on 1st April 2019. Okay. The company has spent, so they started doing a research 50 lakh till 31st May 2021. From 1st April 19 to 31st May 2021, the company has spent 50 lakh rupee. Okay. On 1st June 2021, the company has met all the criteria for development and spent rupees 30 lakhs more. The company has met all the criteria of development on 1st June. Okay. And spent 30 lakh more till 31st March 2022. Explain what will be the treatment of above 80 lakh rupee. So first of all, when the development criteria was met, it was met on 1st June 2021. It was met on 1st June 2021. So the expenses till 31st May 2021 will be considered as a research phase expenses, and this 50 lakh has to be charged to P&L. The expenses beginning from 1st June 21 has to be capitalized as an intangible asset under development. Yes. So this development phase has started from 1st June and 30 lakh rupee has to be capitalized. 30 lakh rupee has to be capitalized, right, as a part of the intangible asset under development, right? So intangible asset CWIP, it is intangible asset CWIP. Okay. It has to be capitalized under the intangible asset under development. Friends, if a company is not able to identify between the research phase and development phase, then treat it as a research phase and charge the expenditure to the P&L, right? For example, A Limited is developing a formula since 2019. The company has made 10 lakh rupee expenditure every year. In 2024, the company has found that the development phase was started in 2023 itself, but till last year, the company has treated that expenditure as a research phase expenditure and charge the expense to the P&L. Suggest the correct treatment. So friends, the second concept is the expenditure charged on a research phase shall not be reversed in the future period. Okay. So what it said, if a company had charged an expenditure considering it as a research phase expenditure, if a company has charged an expenditure in the P&L, in the P&L, considering it as a research phase expenditure, then, so, and in future they recognized, in future they realized that it was a development phase expenditure, as development was already started, so in this case the expenditure already booked as a research phase cannot be capitalized, okay. In this case the expenditure already recorded as a research phase cannot be capitalized, right? Right. Okay. So in this case, what we will do in this case? Example. So the example was in 2024, the company found that the development phase was started in 2023 itself. But till the last year, company treat that as a research phase expenditure. So the expenditure charge on research phase shall not be reversed in the future period. Okay. Right? Clear? Very good. Now let's discuss a question on the research and development phase. So let's discuss a question number 2. Okay. Expenditure on a new production process, right? Expenditure on a new production process in 2001-2. April to December 2700, January to March 900, the total is 3600. The total is 3600. The production process meet the intangible asset recognition criteria for development on 1st January 20x2. The amount estimated to be recoverable from the process is 1000. Okay. So friends, from 1st April to 31st December, it is 2700. 1st Jan to 31st March, it is 900. So, 2001-2. The production process meet the intangible asset recognition criteria for development on 1st January 2002. 1st January 2002. Okay. So, this 1st January 2002. And the recoverable amount is 1000. Then expenditure incurred for development of the process in financial year 23 is 6000. Asset was brought into use on 31st March 23 and is expected to be used for 6 years. If I look at the trajectory of this question, what it is talking about. So expenditure has started incurred from 1st April 2001. 1st April 2001. Okay. 1st April 2001, the expense has started incurred. 1st April 2001 to 31st December, they have incurred a certain expense. 1st April 2001 to 31st December. Okay. Then up to this period, they have incurred 2700. Then they incurred an expense from 1st January 2002, 1st January 2002 to 31st March 2002. Okay. Then they have incurred an expense in 2002-3, and here the intangible asset on 31st March 2003, intangible asset capitalized. Okay. Brought into use. Now the development phase was started here. Development phase. This was a research phase. Okay. This was a research phase. Development phase was started here. This was a research phase. Okay. Friends, now this 2700, what is the treatment of 2700? Charge to P&L. What is the treatment of 900? Capitalized. What is the use of this line? The amount estimated to recoverable from the process is 1000. What is the use of this line? How does this line makes, whether this line makes any difference? Since it is 1000 here, this line does not make any difference. This line says that your carrying amount is less than your recoverable amount. Your carrying amount is less than your recoverable amount. It says that your carrying amount is less than your recoverable amount. Okay. Your carrying amount is less than your recoverable amount. So it says that your carrying amount is less than your recoverable amount means no impairment. But let's say if this would have been written here, the amount estimated to be recoverable from the process is 800 rupees. Then do we need to do anything for this line? Yes, in that case, we have to charge an impairment loss of 100 rupees and our carrying value of that and our carrying value of intangible asset under development will be 800 rupees, right? But since it is more than the carrying value, so we are not required to do anything. Okay. Then, sir, during 2-3, the expenditure was 6,000 rupees, which was incurred. So since it is already a development phase, this expenditure is going to be capitalized. So what is my total value? What is my total value of the asset as on 31st March 23? 31st March 2003? The total value is 6,900 is the total value. Okay. And what is my useful life? My useful life is 6 years. Now, what is the ask of the question? What is the demand of the question? The demand of the question is you have to provide the carrying amount of intangible asset on 31st March 2 and 31st March 3. Also determine the charge to P&L for 2001-2. And as on 31st March 2004, the amount recoverable from the process is 5,000. Determine the carrying amount of the intangible asset on 31st March 2004 and the charge to P&L for 2003-4 on account of impairment loss. So let's do one by one. Now, what is my expenditure in 2001-2? How much total expenditure we have incurred? 2700 plus 900, right? But 900 is relating to the development phase. So research phase expenditure of 2700 will go to the P&L. This is what we discussed. This 2700 expense will go to the P&L. This is what we discussed, 2700. Yes. Okay. So now, what is my carrying amount of intangible asset under development on 31st March 2002? 900. Since recoverable amount is higher, no impairment. Now let's come to 31st March 2003. You have opening balance of 900, addition of 6,000. 6,900 is your total balance in your intangible asset on 31st March 2003. This is your carrying value. No recoverable value is given on 31st March 3 and hence we will not check any impairment. Now 2003-4. In 2003-4, this 6,900 is the opening balance of intangible asset. What is my useful life? My useful life is 6 years. So 6,900 divided by 6. How much it will give me? 6,900 divided by 6. It will provide me 1,150 rupee, right? So 6,900 is my balance. 1,150 is my amortization. What is my carrying amount? My carrying amount is 5,750. This is my carrying amount is my cost minus accumulated depreciation minus accumulated impairment losses. Okay. So for checking the impairment, now I need to find out what is my recoverable amount. See, the question has given you the recoverable amount of this process on 31st March 2004. So friends, if 5,750 is my carrying value and my recoverable value is 5,000, then what is the amount charged to P&L? My amount charged to P&L is 750. My amount charged to P&L is 750. Okay, this will be my amount charged to P&L. Okay, this is my impairment loss. And then what is the carrying amount? Carrying amount is, what is the formula of carrying amount? Cost minus accumulated amortization or depreciation minus accumulated impairment losses. If it is a tangible asset, if it is a PP&E, the word used is what? Depreciation. But if it is an intangible asset, the word used is amortization. Okay. Is that clear? Great. Now let's discuss question number 3. Okay. Question number 3. Question number 3. Yes. Question number 3 is checking your concept of amortization also, right? And friends, like we discussed in PPE standard. So what we discussed in PPE standard? In PPE standard, we discussed the depreciation. What is the depreciation? Depreciation is a allocation of depreciable value over the useful life of the asset. Okay. What is the depreciable value? Depreciable amount is cost minus residual value divided by useful life. Sorry, cost minus residual value is your depreciable amount. And when you divide this depreciable amount by useful life, it will give you depreciation per annum. So friends, what is the formula in the intangible asset? In the intangible asset, do you have any residual value? Generally, there is no scrap value on the intangible asset. But if the question will give you, a company has purchased a software for rupees 1 crore, and there is a contract with one party that after 10 years the company will uninstall this software and get the software installed into the laptop of that other party after 10 years at 5 lakh rupee. So it means 1 crore rupee you spent as a cost today, and after 10 years you will receive 5 lakh rupee. So in that case, cost minus residual value, 1 crore minus 5 lakh rupee is the amortized amount, is the depreciable value. Okay, is the depreciable value. So friends, in intangible asset, while talking about the depreciation, so it is amortization. The name is amortization, concept is same. This intangible asset amortization method or amortization is a estimate, right? So amortization is an estimate. Why? Because when you are amortizing, when you are charging an amortization, you are considering a estimated useful life. That is number one. Number two, there are three amortization method: straight line method, and we discussed in detail in PPNE, right? In intangible asset also we discussed in the full class. This is a revisionary class. So straight line method means you are looking at the future economic benefit trend. If your future economic benefit has a constant trend, means you are getting a same benefit over the useful life, you are using straight line method of amortization. Number two, if your intangible asset will provide larger efficiency in the initial year, then it will go down subsequently. Then my dear friends, then it will be, then it will be, then it will be, good to use WDV method, because the benefits are decreasing. The benefits are decreasing. Okay, the benefits have a decreasing trend. So it will be WDV method has to be used in that. Okay. Then the third one is unit of production method. What is my unit of production method? My unit of production method is if the asset is providing you the benefit on the basis of usage, the unit of production method is appropriate method of amortization. Appropriate method of amortization. Okay. Then my dear friends, we discussed that you have to depreciate, you have to amortize your intangible asset over the legal or contractual life. Okay. For example, the government has given you a license for 20 years. What is the amortization period? Amortization period is 20 years. So your life of the intangible asset, useful life of the intangible asset cannot go beyond legal or contractual life, but it can be shorter than legal or contractual life. For example, government has given you a license for 20 years, but you only need that license for 15 years. You went to the government and you asked, sir, we need license only for 15 years. Government said, no, 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 we are not providing the license below 20 year. 20 year is the minimum period. 20 year is the minimum period. Okay. 20 year is the minimum period. Okay. Right. So friends, 20 year is the minimum period. Government said that 20 year is the minimum period. So in that case, the contractual or legal life is 20 years, but the usable life is 15 years only, because you need this asset only for 15 years. In that case, whatever money you have paid to the government, whatever intangible asset which was capitalized, whether it has to be amortized over a period of 15 year or 12, 20 year. So the useful life of intangible asset cannot be beyond contractual or legal life, but it can be shorter than contractual or legal life. It can be 15 years. Okay. If the usable period is 15 year, if the usable period is 15 year, the total contractual period is 20 year, then 15 year is the useful life. Okay. For the purpose of amortization. Is that clear? Is that clear? Okay. So friends, then the concept was finite life and indefinite life. What is the concept of finite life and indefinite life? So let me quickly show you this concept of amortization. Okay. With the PPT. Useful life concept. Useful life concept we discussed. Useful life is shall not exceed the period of contractual or other legal life, but it may be shorter depending on the period over which the entity expect to use the asset. Okay. Right. So useful life of an asset can be finite life and can be indefinite life. Finite life like 15 year, 20 year, 5 year, okay, 2 years, 7 years. So if it is a finite life means limited period of benefit to entity, then amortization required. But if the life is indefinite, you acquire a company, you got an intangible asset, goodwill. You don't know this goodwill. Acquiring this company will give me a synergy till how many period we don't know, right? So no foreseeable limit to the period over which the asset is expected to generate net cash inflows to the entity. Okay, no foreseeable limit. Okay, no foreseeable limit is there. So in that case, how will you amortize? If you don't know, this goodwill will give me future economic benefit for how many years? 20, 30, 40, 75, 10, 20 years? No, you don't know. So in that case, how will you amortize? In that case, what you will do? You will not do any amortization. You will check the impairment. Amortization not required, but there is a mandatory impairment testing. There is a mandatory impairment testing. Okay. Mandatory impairment testing will be there. Okay. Yes. Friends, this amortization means allocation of the amortized amount of an intangible asset with a finite useful life on a systematic basis over its useful life. Right. This amortization begin when the asset is available for use. This will stop. This will stop earlier of the date when the asset is classified as held for sale or when the asset is derecognized. When the asset is classified as held for sale or when the asset is derecognized. Okay. Amortization method is straight line method, WDV method, and unit of production method. This amortization method is depending on the pattern of usage, right? Of the pattern of usage, pattern of getting future economic benefit. If pattern cannot be determined reliably, the straight line method cannot be used, right? And this amortization method, amortization period, all these aspects are change in estimate. It will be considered as a change in estimate. Amortization charge. This depreciation amortization has to be charged to the P&L, but if this intangible asset has been used in the development of either another intangible asset or property, plant and equipment, then the depreciation has to be capitalized as a part of the cost of that asset. Okay. So these and this amortization method and amortization period, useful life and the method of amortization is required to be reviewed at least at each financial year end, right? Okay, and if there is a change, it has to be changed, and this will be considered as a change in accounting estimate, and it has to be applied prospectively, right? So friends, while it is a revisionary class, but still I have covered all the concepts. Now let me take you and discuss this question number 3. X Limited purchased a patent right on 1st April 2001 for rupees 3 lakh. For rupees 3 lakh. Okay, 1st April 2001. Which has a legal life of 15 years. What is the legal or contractual life? 15 years. However, due to the competitive nature of the product, the management estimate a useful life of only 5 years. So management is saying this technology will be scrapped and I will be able to use only for 5 years. Okay. Straight line amortization is determined by the management to be the best method. Straight line amortization is determined by the management to be the best method. Right. So they have given you SLM. They have also indicated you 15 years is the contractual life, but the usable life is only 5 years. Okay. So what should we use? We should use 5 year or 15 year for the purpose of amortization. Yes, we should use what? Which life? 5 years. Okay. As on 1st April 2002 means after 1 year, management is uncertain that the process can actually be made economically feasible and decide to write down the patent to an estimated market value of 1.5 lakh and decide to amortize over the 2 year period. So the cost was 3 lakh rupee. They purchased the net value. Correct? 31st March 2003. What is my value as on 31st March? So on 31st March 2002, 2,40,000 is the net value because original cost was 3 lakh, depreciation was 60,000, 240 is the net value. Okay. And you know, on 31st March 2002, nothing was given. On 1st April 2, this uncertainty was given on 1st April 2002. So now, on 1st April 2002, the downward revaluation is recorded by writing out the asset to the estimated value of 1.5 lakh, where what you have done, so this 2.4 lakh now become 1.5 lakh. What entry you have? Okay. Yes. So now on 1st April 2003, this intangible asset comes down to 1.5 lakh and this 90,000 is charged to the P&L. Now, amortization. Now on 1st April 2003, sorry, 2, what is my remaining amortization period? 2 years only. You remember it is given in the question. So what is my amortization for financial year 2-3? It is 1.5 lakh divided by 2, 75,000. And what is my carrying amount as on 31st March 2004? My carrying amount on 31st March 2004 is 1.5 minus 75, 75,000. Right? Sorry, carrying amount as on 31st March 2003, right, is 75,000. In any doubt? 1st April 2001, we purchased the asset. 31st March 2002, we computed carrying value using the 5-year life. On 31st March 2003 is 75,000. What is the opening balance on 1st April 2003? The opening balance is 75,000. Now what it is written? On 1st April 2003, they have appraised, they have done the upward revaluation of 3 lakh rupee at a value of 3 lakh rupee, and the life is also revised to 4 more years on 1st April 2003. So my dear friend, on 1st April 2003, the carrying value of the patent is 75,000. What is the revalued amount of patent? 3 lakh. Now, what is the revalue plus? What should we do? So intangible asset account debit entry we have passed. Intangible asset account debit. The entry is 2.25 lakh. Now the question is, I need to credit my revaluation surplus in OCI. But at what value? The entire 2.25 lakh? Answer is no. Standard says that if you have done the revaluation, right? So initially when you did the revaluation, there was an impairment loss. Subsequently, there was a revaluation surplus. So first of all, adjust the revaluation surplus, impairment loss we recorded earlier. We will reverse the impairment loss in the current P&L, right? So 2, impairment loss in the P&L credit. How much? 90,000. So we have recorded 90k, 0.90 lakh, right? And then the remaining 0.90 lakh means 90,000, na? 90,000. Okay, then the remaining amount of 1.35 lakh will go to 1.35 lakh will go to the revaluation surplus. Right? And provided for the financial year 3-4 is 75,000. Sir, ये 75,000 कैसे आया? So friends, on 1st April 2003, it was estimated, the life was estimated to be how many years? The life was estimated to be 4 more years, right? Life was estimated to be 4 years, right? So 4 years. So 3 lakh rupee is the opening balance 1st April 2003, and in 3-4 you have debited your amortization 3 lakh divided by 4 by 75,000. Net value is here, it will become 0 at the end of the 4th year. It will become 0. Yes, is that clear, my dear friends? Is that clear or clear? Is that clear or clear? Please tell me. Is it clear in mind or clear from mind? How is it? Clear in mind or clear from mind? I want to ask. Is it clear in mind or clear from mind? Not me. You don't know whether it is clear in mind or clear from mind? Yeah? No? Okay, clear in mind. Okay, it is clear in mind. Just allow me 1 minute. Allow me a minute, my dear friends. Let me ask you multiple choice question. Some multiple choice question. Let me discuss some multiple choice question on Ind AS 38. Shall I cover those multiple choice question on Ind AS 38 to check your knowledge on Ind AS? Is not covered within the scope of Ind AS 38. Which of the following is not covered within the scope of Ind AS 38? Okay. Intangible asset held for sale in the ordinary course of business, asset arising from employee benefit, non-current intangible asset held for sale, all of the above. So, on which item the accounting of Ind AS 38 is not applicable? Intangible asset held for sale in the ordinary course of business, inventory, arising from employee benefit, Ind AS 19, non-current asset held for sale 105. All of the above. Answer is what? Answer is D. Answer is D. All of the above. Okay. An intangible asset is identifiable. An intangible asset is identifiable when it is separable. When it is separable means capable of being separated or divided from the entity and sold, transferred, licensed, rented or exchanged either individually or together with a related contract, asset or liability. Okay. When? First, it is separable. Second, it arises from contractual or other legal right, regardless of whether those rights are transferable or separable from the entity or from other rights and obligation. C. Either A or B applies. D. None of the above. Tell me, which is the right answer? None of the above or either A or B? Yeah, tell me what is the right answer. Yes. For second, C is the right answer. Actual rights. Okay. So AG Limited. AG Limited has purchased a computer with various additional software. With various additional softwares. These are integral part of the computer. These softwares are integral part of the computer. Which of the following are true in the context of Ind AS 38? Recognize computer and software as intangible asset. Recognize computer and software as intangible asset. So AG Limited has purchased a computer with various additional softwares and these are integral part of the computer. Which of the following are true in the context of Ind AS 38? Recognize computer and software as tangible asset. As tangible asset, PPNE. Recognize tangible and intangible assets separately. Recognize computer and software as intangible asset. None of the above. What is the right answer? Answer is A. Right? Answer is A. A is the right answer. Okay. Now, fourth. Which of the following items qualify as an intangible asset? Which of the following item qualify? Launch of a huge product. Whether this item qualifies as an intangible asset? No. Operating losses during the initial stages of the project. Abnormal losses. The company. The company has spent the training cost for the employee. Whether the company control the employee will learn this MBA program in the company and after 6 months employee will resign and join another company, right? So which of the following items qualify? So A, B, C does not qualify. D, legal cost paid to intellectual property lawyers to register a patent. Okay, answer. Okay, D is the right answer. A newly set up .com entity, engaged you as its financial advisor. Okay, as its financial advisor. The entity has recently come stakeholders. Okay, which one is true? Okay, so the entity is recently completed one of the highly publicized research and development project and they are asking for your advice. Number one, cost incurred during the research phase can be capitalized. Is it a true statement? Cost incurred during the research, seemingly right, सही लग रहा है. Training cost of technicians used in research can be capitalized. No. Designing of jigs and tools qualifies research activities. No. Right. So what is the right answer? B is the right answer. Cost incurred during the development phase can be capitalized if criteria such as development phase can be technical feasibility of the project being established are met. Okay. AG Limited, just a minute. AG Limited is developing a new production process. AG means Alok Garg Limited. During 2018-19, Expenditure 80 lakh was incurred between January and March 2019, right? AG Limited is developing a new production process during 18-19, expenditure March 19. Okay. So during 18-19, expenditure incurred was rupees 10 lakh. Out of which 7 lakh. The company is able to demonstrate that at January 1, 2019, the production process meets the criteria for recognition as an intangible asset. So from January 2019, that after January 2019, which is after meeting the development criteria. Now, the recoverable amount of the know-how embodied in the process, including future cash flow to complete the process before it is available for use, the recoverable amount is estimated to be 2 lakh at the carrying value of intangible asset at the end of the year. What is the carrying amount of the intangible asset at the end of the year? 7 lakh has to be charged to P&L. 3 lakh has to be capitalized. But 1 lakh rupee has to be impaired because the recoverable value is 2 lakh only. C is the right answer. Measurement model, cost model, revaluation model. Which is the right measurement model? Cost model, cost for fair value model, cost for revaluation model, cost for recoverable value model, cost for revaluation model. Simple question. Amortization. The answer is already there. When the asset is derecognized, when the asset is withdrawn from use, at the earlier of the asset is classified as held for sale or derecognized. At the earlier of the asset is derecognized or asset is held for sale. Okay. C. An intangible asset with a finite useful life should be amortized over its expected useful life, a period determined by the management, 5 year, no foreseeable limit. What is the right answer for question number 9? 9 is expected useful life, not the period determined by the right answer. 10. Question number 10. AG Limited acquired copyright for rupees 7.5 lakh on 1st April 17. Assess the useful life at 25 years from the date of acquisition. Assess that the okay, means straight line method. The fair value of the copyright as on 31st March 19 is 7 lakh. Fair value of the copyright on 31st March 19, 7 lakh. The entity shall measure the carrying value of the copyright on 31st March 19 at. So we are asking about 31st March 19 means 31st March 18, 31st March 19 after 2 years. So what is my total for 2-year period? 7.5 lakh divided by 25, which gives you how much? Which gives you how much amount? 7.5 lakh divided by 25. For 2 years, 30,000 for 1 year. 30,000 for 1 year, 60,000 for 2 years. What is the carrying amount? 7.5 lakh minus 60,000. 6.9 lakh. Fair value is 7 lakh. What is the carrying amount? At what value it is carried in the balance sheet on 31st March 19? 7 lakh, 6.9 lakh, 7.2, 7.5 तो हो ही नहीं सकता. 7 lakh और 6.9 lakh. 7 lakh. Whether question is asking you, whether question has specified your cost minus accumulated depreciation is lakh. Your fair value is 7 lakh. So how does it matter? This 7 lakh value, fair value matters only continued at cost model, which is cost minus accumulated. The fair value of the copyright would have been 6.5 lakh instead of 7 lakh then you have to impair. So going by the principle of connect is the right answer. So this question was very simple. The only catch in this question was whether you are taking 6.9 or 7. That was the only catch. Otherwise, this question was very simple. Okay. Yes. I hope you enjoyed solving this question. Yes or no? Have you enjoyed solving this question, my dear friend? Now, question number 4. This question number 4 is relating to different accounting transactions. Okay. Let's discuss this question number 4. X pharma is drug. It is not a drug. It is formula. It is medicine. Okay. Drug means medicine. X Limited acquired a 4-year license to manufacture a specialized drug at a cost of 1 crore rupee at the start of the year. Production commenced immediately. Production started immediately. Okay. Tell me, what is the accounting entry? What is the accounting entry? And this is when this is acquired, it is available for use. What is the accounting entry? Capitalized. This license has to be capitalized, right? Okay. So it should recognize the license as an intangible asset because it is separable. External purchase. Whenever it is an external purchase, it is a rebuttable presumption, it is separable. Separately identifiable and considered successful in respect of feasibility and probable future cash flows. So the drug license should be recorded at 1 crore rupee. Now, second, transaction. Also, the second question is on business combination. As part of the acquisition, X Pharma acquired a book. The fair value is 3 crore rupee. Tell me, at what value I should recognize this asset, intangible asset? At what value should I recognize this intangible asset? This has purchased the company, means part of the acquisition. The company has purchased a brand also, has to be recorded at fair value. This brand has to be recorded at fair value because it is part of the acquisition. It is not self-generated. So it should recognize the brand as an intangible asset because it purchased as a part of acquisition and it is separately identifiable. The brand should be amortized over a period of 15 years. 1 crore on advertisement campaign during the first 6 months. Subsequent sale have shown a significant improvement and it is expected that this will continue for 3 years. This advertisement treatment of this advertisement expenses. The accounting treatment of the advertisement expenses is this advertisement expenses has to be charged to the P&L. This advertisement expenses has to be charged to the P&L. Charged to the P&L. Okay. It has to be charged to the P&L. Right. So if you look at third, advertisement expense of 1 crore should be expensed off. Fourth, it has commenced developing a new drug, drug A. A new drug. They started developing a new formula. The project cost would be 10 crore. Clinical trial proved successful and such formula is expected to generate revenue over the next 5 years. The cost incurred till 31st March 2001 accumulated is 10 crore. Up to 31st March 2001, 5 crore has been incurred. In 2001 too, another 5 crore will be incurred. So what is the accounting? Opening cost 5 crore, development cost 5 crore, total cost 10 crore, right? So till the time it is not getting completed, whatever is the development cost, whatever is the development phase expenses, it has to be capitalized under CWIP intangible asset, which is known as a intangible asset under development. So every time you pass an accounting entry, intangible asset under development account debit to bank account. Okay. Every time you pass that accounting entry. Development of another drug, drug B. It has incurred 50 lakh rupee towards research expenses till 31st March. The technological feasibility has not yet been. This research phase expenses has to be expense of. This has to be expense of. 2. Question number 3. Question number 4. And we also did question number 5. Yes, question number 5 we also did. Question number 6 we didn't do this question number 7 we did, right? And question number 8 we haven't done question number 8. So out of 8 questions we have completed 6 questions, right? Now my dear friends, let's go to quick model and cost model. Okay. So friends, in the subsequent measurement, as you all are aware, and this concept is the same concept like PPE concept, the company has to choose either a cost model or a revaluation model as a part of its accounting policy. Okay. If intangible asset is accounted using the revaluation model, all the other asset in the class shall also be accounted for using the same model unless this line was not written in PPE standard. So PPE standard says that if you are opting for a revaluation model, you have to opt for a class of asset. For example, office building. Class of asset means an asset which is having a similar nature and use in an entity's operations. This is known as a class of asset. Okay. It says that if you are using a revaluation model for asset, okay. So if you are revaluing one building, you have to revalue all the 5 buildings coming into the office building class. Okay. Right. So likewise, your intangible asset. Okay. When you are revaluing your intangible asset, okay, there are 5 formula, for example. So company has opted for a revaluation model for the formula class of asset. Means company has to do the revaluation for all the 5 formulas. But there are a fair value for one formula. So standard says that that is okay. So the bottom line, the core principle is, if you have to remarket exist, in that case you can skip that asset for revaluation and you can use the cost model for that particular asset. Okay. But otherwise, what is the core principle? Should be applied to the whole of a class of intangible asset and not merely to individual asset within a class. Right? So can choose either cost model or revaluation model as accounting policy. When use a cost model, same like accumulated impairment losses. If you have used a revaluation model, sorry, on the revaluation model, you have to, after initial recognition, when you are doing a revaluation, an intangible asset is to be carried at revalued amount, being its fair value at the revaluation date. And what is your carrying amount? The carrying amount is revalued amount on the date of revaluation minus subsequent accumulated amortization minus subsequent accumulated impairment losses. This is the carrying amount. For revaluations under Ind AS 38, fair value shall be determined by the reference to intangible asset to which that item belongs should be revalued unless there is no active market for those assets. Unless there is no active market for those assets. Okay. Class of asset means a grouping of assets of similar nature and use in an entity's operations. Sir, if we have used a revaluation model, major volatilities are there every year. If no major volatility, then you can use a frequency of 3 to 5 years. Okay. If you have done the revaluation and first time there is a revaluation gain increase, you have to debit your intangible asset, credit your revaluation surplus. After that, there is a decrease, means the 10 lakh rupee was the value of the intangible asset. It was increased to 12 lakh rupee. 2 lakh rupee you have credited to the revaluation surplus. In the next year, 1 lakh rupee. In the next year, 1 lakh rupee you have. So there is an impairment loss of 1 lakh rupee. So whether this 1 lakh rupee adjusted with the revaluation surplus. So last year we recorded 2 lakh rupee of revaluation surplus, but this year we have 3 lakh rupee of impairment. What we are required to do? In that case, okay, we should debit the revaluation surplus. P&L impairment loss debit 1 lakh. There is an impairment loss, the P&L, right? But if revaluation surplus is more than the earlier recorded impairment loss, then you are required to first, to the extent of impairment loss, you have to credit P&L. Sir, the revaluation surplus which is there, what is the treatment of revaluation surplus? The revaluation surplus can be used in two ways. Either one, during the life of the asset. Number two, after the then whatever revaluation surplus is there, it has to be allocated to the extent of extra depreciation, right? For example, of different depreciation which started coming in due to the revaluation to that, right? Useful life we have discussed, my dear friends. Yes, 6 question we have discussed, lot of concept. Income, right? Definition of intent. Then what we have covered? We have covered intangible asset has to be initially measured at cost, right? And we discussed lot of mode of purchase price plus asset is acquired on deferred payment credit, then exchange of asset, then your intangible asset acquired, right? The second is fair value of asset acquired. The third one is if both the fair values are not given, then you have to use WDV of the asset given. If the and these intangible asset may arise, it will also require to be intangible asset and government grant may